So today we're taking a look at the 2022 Q3 financial reports of Real Broker. If you are considering joining a company and partnering up with them, that's a pretty big decision. I think it's absolutely a responsible thing to do to take a look at their financial health, right? Make sure that the company is growing. Make sure that they're growing by agent count and that they're profitable, that they don't have too much debt, and they're just financially healthy. And Real Broker is very transparent with all these numbers. Every single quarter, every single year, they publish these financial reports and release them out to the public. And if you are interested in reading this financial report or any of the other ones for yourself, I will have a link down in the description below to where you can find this report. So let's jump right in. So for Q3, it says that revenue increased 188% year over year to $111 million. So just in Q3, $111 million has a 188% increase. So 100% is doubling. If it was 200%, that's tripling. So Real Broker almost tripled the amount of revenue that they've received in this quarter versus the quarter of 2021. Next, it says that the gross profit grew 158% year over year to $8.6 million. So they had $111 million coming in revenue. 8.6 million of that was profit. And again, the percentage is what really interests me. So 158%. So they more than doubled. They almost 1.5 or doubled and a half doubled the amount of revenue that they received in just a 1 year timeline from 2021 to 2022. So far, those are great numbers. That is exactly what you want to see in a company. The next line here says net operating loss of $4.3 million compared to a loss of $1 million in Q3 2021. Now this term net operating loss, I actually looked this up just to get some specifics of what this means. And it says here that under U.S. federal income tax laws, a net operating loss occurs when certain tax-deductible expenses exceed taxable revenue for a taxable year. So my understanding what this means is that they're reporting this much taxable income, but they had this much in tax-deductible expenses, and that exceeds their income, so they don't have to pay taxes on that income. You know, as real estate agents, we're definitely familiar with reporting non-taxable expenses in order to reduce our total tax burden. And that's really what it sounds like they're doing here. And I know in this past quarter, they've spent a good bit of money. They reinvested a good bit of money into the company, where they recently just acquired Lemon Brew Lending, which is they bought an entire mortgage lending company to incorporate into the Real Broker. They recently bought a title company, which they're incorporating the Real Broker as well. And they've invested a lot of money in software development and re-upping the agent app, but also creating a brand new consumer app. So all these expenses on all these acquisitions and software, these are all tax deductible. So a net operating loss of $4.3 million, to me what that really sounds like is that they have spent that much more than what their revenue was for this time period. And that's actually kind of a good thing. That means that they're reinvesting money into the company, which is something that I think you really want to see. Now, further down, it says, as of September 30th, 2022, the company held $21.9 million in cash and additional $9.8 million held in investment securities available for sale at fair value. So essentially, on their balance sheet, they have pretty much access to $30 million in cash. Right below that, it says the company purchased $1.1 million of common shares pursuant to its normal course issuer bid. So to me, that sounds like a corporate buyback, right? This is a very common practice where corporations will buy back their stock from the public market. It does a few things. One, it helps increase the value of the stock by them making a big purchase like that, but also it gives them more equity back, right? They don't want to sell too much of that equity. They do want to hold on to a good amount of that equity. So in this quarter, they purchased an additional $1.1 million of that stock back. So now let's talk about some of the operational highlights in the company. So at the end of Q3, they surpassed 6,700 agents, and that is a 126 year over year increase in agent count. So 126, I've seen other numbers, maybe year over year or other time periods where it's actually 150% increase, but 126% increase is pretty good. Again, that is more than doubling every 12 months. So that's at the end of Q3. We're pretty close to the end of Q4 right now. and we're pretty close to passing 8,000 agents. I'm pretty confident we'll pass that before the end of the year. And so you can see just how quickly this company is growing. It is more than doubling every 12 months, and I feel like that pace is actually accelerating right now. It's not slowing down at all. Like the more we grow, it just has exponential growth. The more agents there that are out there recruiting and helping grow the company, the faster the company grows. It goes on to say that the number of transactions executed over the platform grew 197% year over year to 11,233 transactions in Q3. So again, 197% is tripling. 100% is doubling, another 100% is tripling. So that is huge. We've tripled the number of transactions closed in just 12 months. So below that, it says that for agents that closed a deal during Q3, commission revenue per agent was slightly over $35,000 per agent for Q3. These agents on average closed 3.6 transactions during that quarter. Now I want to talk about eXp Realty just for a moment, and kind of one of the big differences between the companies. So eXp, their goal is to become the largest brokerage in the world by agent count. They have a goal of hitting 1 million agents. One of the easiest ways to do that is to go after brand new agents. And they've worked in a lot of incentives to encourage agents to try to recruit brand new agents. So one way is that at eXp, if you bring in a brand new agent, you do get a small bonus whether they ever close any transactions or not. At Real, however, if you bring in an agent, you only get that free stock bonus when they close their first transaction, right? And so that's kind of a big difference, that at eXp, you don't have to bring in a producing agent to make some sort of profit. You make a profit off of them, no matter what. You get some kind of stock bonus no matter what. Also with eXp, they charge monthly fees, right? It's almost $1,000 a year just to be an agent at eXp, whether you close a transaction or not. So they want newer agents because they still make a profit off those agents, whether they close any transactions or not. At Real, they only charge an annual fee, and that gets taken out of your first 2 commissions of the year. So if you're a non-producing brand new agent, Real doesn't make any money off of you unless you actually close transactions. And I think that this is a pretty big distinction because at eXp, they have a lot of brand new non-producing or very low producing agents in the company. I'd say a pretty big portion of the agents at eXp are non-producing or very low producing. At Real, they didn't want to go after that demographic. They wanted to go after the producing agents or actually closing transactions. So if we look at these numbers, that says that the average commission for agents that are closing transactions was $35,000, and that the average agent closed 3.6 transactions in Q3. I can almost guarantee you those numbers are way higher than the average agent at eXp, just because their business model incentivizes recruiting non-producing brand new agents. And I'm not knocking that, it's not a bad business model, right? It is a pretty big distinction between the two companies. Real is really going after the producing agents, where eXp, they have producing agents, but they are really very appealing to brand new non-producing agents as well. And the report goes on to say that the operating expenses per transaction, excluding revenue share, declined 43% year over year to $802 from $1,419 Q3 2021. So let that sink in, that the operating expenses per transaction decreased 43%. So this is an example of economy of scale. As the agent count grows bigger and bigger and bigger at Real, their operating expense per transaction is going to get smaller and smaller and smaller, and they're going to become more and more profitable. And the reason for this is because they have a lot of fixed costs to run this business, no matter how many agents that they have, right? They're investing a lot of money into technology and support for the agents. And so the more agents that they have, the more revenue that they have coming in, just the more profitable that they're going to be. And this is really exciting because Real is growing very, very quickly. So I don't know about you, but when I look at these numbers, it gives me absolute confidence in this company. All of the numbers are looking good. There's not a single bad number in there. The agent count is growing, the transactions are growing, the revenue, the profit is growing. The cost, operating cost per transaction is shrinking. And that is exactly what we want to see. That is the economy of scale at play. So these numbers give me absolute confidence in this company. So if you're considering making a move to Real Broker, I want you to click on the link down in the description below. That'll take you to my calendar where you can select a date and time for us to hop on a one-on-one video call, talk to you a little bit more about my experience here at Real Broker and see if it'd be a good fit for you or not. And in the meantime, if you want to learn more about what the CEO of Real Broker's vision is for the company, check out this video I did right here breaking down his full presentation at the 2022 One Real conference. Thanks so much for watching, and I look forward to hearing from you.